when I'm looking at a pattern like this is a ascending triangle on the 240-minute chart, the 4-hour chart of the dollar Canada. You can see here to the top I've got a static or horizontal level. Okay, and I've got to the bottom the support of an uptrend line. Now I know what that is. These are just lines and levels that make up this pattern. The pattern cannot form without these dynamic and static levels. That's the first thing. The second thing, in terms of what I want to do with this continuation ascending triangle, I understand what AutoChartist has labeled it. Continuation meaning that the overall trend we're assuming is up with the support of this uptrend line. It is an ascending triangle. It's a congestion or consolidation pattern. But this pattern is only valid within the context of the 4-hour chart being in congestion or consolidation. So if I go to a 240-minute Canada, squeezing the market memory of about a month, I do have right now the beginnings of a sideways market. So this is a good pairing between what the 240-minute chart has cycled into in terms of a sideways market and this consolidation congestion pattern, which is a sideways pattern. Okay, it might be a big pattern, it may not be a pretty pattern, but there's a number of things I can do. One, I could look for potential shorts off this horizontal or static ceiling, this resistance level. Okay, I could look for a reversal of this continuation. I could look for prices. There's a number of setups. Whenever you're looking at a trending pattern, there's a number of potential setups. So I've got the pressure. I could play the short off the resistance. I could play the short off a breakdown through the support level of this uptrend line. Yes, this uptrend line here is, significant support. So I could play the short off that uptrend line of a break. I could also play, and here's where it gets really interesting. Okay, I could also play a bounce off this uptrend line. This uptrend line is a major decision level. It's support, yes, but if the support breaks, I can play the short. If we get a bounce off support, I could play the trend follow and the continuation. And we've also talked about how I can play a short off this static horizontal ceiling, right? So there's a number of decision levels here. There's a number of things I can do just with these two lines and this simple continuation ascending chart pattern alert from AutoChartist. Okay, so what just looked like a very plain Jane beginning, all of a sudden now it opens up a whole world based upon consolidation or congestion. Because consolidation or congestion is what? It's balance. It's uncertainty. It's nobody wanting to step out and do anything. The reasons for that could be a myriad of technical or fundamental reasons, and typically a combination of both. Okay, but whenever you have a consolidation pattern, congestion pattern, a sideways pattern, you've got multiple choices, especially if one of the levels or both are horizontal. Okay, now how do you decide what to do? I've given you a whole bunch of choices here. Now how do you decide what to do? Well, if this market was moving in an upward angle, immediately it would negate the triangle qualification, but I would have the support of this uptrend line. And if this was happening, if this overall market, the underlying market cycle was happening as an uptrend, I would buy the bounces of this trend line. So I could park a buy stop and buy the bounces of this uptrend line. If the market was doing what I call distribution, it's moving sideways but with more volatility. And for those of you that are familiar with the wave, I refer to that as a 2 to 4 o'clock clock angle. And that market cycle, I could short the resistance here. Okay. Finally, if the market does, and this isn't finally, this is a third option. If the market does what I call a quick cycle, or quick transition, quick turnover, short cycle, I could play the short of this breakdown. And frankly, if the trend follow fails, in other words, if my playing the bounce within the context of an uptrend fails, the failure could absolutely initiate the reversal. So your trend follow failing would be one signal of that quick transition or short cycle where you could short. Okay, now finally, the last opportunity would be within the context of a sideways, what we call a 3 o'clock wave. In that situation, I could proactively wait for a breakout or breakdown. Now realize each one of those is determined by the underlying market cycle, and by understanding the market cycle, I can go ahead and trade proactively, placing proactive orders, buy stops, sell stops, limit orders, whatever it may be, for the appropriate direction before it triggers. I could park them in the market, and in that way I'm ready. But the only way I can do that is if I take a market cycle reading and understand if I'm trading in a distribution or a wider volatility sideways market, a tighter sideways market, or a trending market. That's how we determine what to do with these decision levels. It's really that easy. What we determine to do at each one of these levels is dictated by the underlying market cycle.